Okay, let's go ahead and reconcile month of January. We're going to get started with our credit card statement. Here it is. All right. Okay, so again, make sure we select the correct one. So here it is. All right, enter our ending balance, new balance right here. All right, ending statement right here. All right, do we have finance charges? Let's see. We have cash financing charge. I mean, we could enter it right here on this interface. We do have that option, so why don't we go ahead and do that? Okay. Oops, the date, sorry. That's when we borrowed that money. The bank charges a fee to borrow it. So again, interest and finance charge, here it is. So what's happening, right? Once we actually move forward with reconciliation, we will book a transaction. So let's make sure we understand what is that we're booking, right? So what's happening? The fee is being charged to our credit card and it's added to our balance. So here it is, our liability goes up, right? Because it's added to our balance and therefore it increases. What else is happening? Well, our expense on interest and finance charge is going up as well. Expenses go up when debited, right? And liabilities go up when credited. So here it is, right? That's our expense account. This account, right, is being debited of this amount. And at the same time, this amount right here, right, it's a credit. It's a credit to this account, 21,100. Okay, so let's book this one and start reconciliation. All right, here we are. Okay, so we can see that our finance charge right here, $50.01, is already check marked. So here we are. Let's check mark that as well. What else do we have? Well, we have our payments right in returns. So here it is. We can go ahead and click those. We have those. Okay, so let's now go to our charges. What do we have? It's a little hard to see, so we're gonna make it a little bit bigger right here. Okay, hold on just a second. Here it is. All right, so we can see our amounts, right? So 2,500 that we borrowed to start our business. Here it is. And then our charges, all of those increase our credit card balance. Here it is. Here's this one. Okay, good. Here's this one. And $83.17. So here it is. Our difference is 0, right? Which means we successfully reconciled this account, right? We don't have anything here, so let's check mark it and finish it now. All right. We're not going to do any of that. We're done reconciling and we're done. And here it is. All right. Okay, before we move forward with reconciliation of our bank statement, let's go back for a second. And unlike desktop version of QuickBooks, QuickBooks Online doesn't prompt us to run the reports, but we're going to do it anyway, right? So let's go and do it right here. Okay, so this is our review report. Okay, so here's our reconciliation report. Again, let's make sure everything is here. Yep, payments and credits. All the charges are right here. And let's see, our balance matches. So again, we would print it just like we normally would, and we would attach it to this statement. Okay, we're going to go back and we're going to move forward with reconciliation of our bank account. Okay, let's go ahead and move forward with reconciliation of our bank account. Okay, here it is. Let's make sure we select the right one here. All right, our ending balance. Okay, ending date. Good. All right, do we have service charges? Yes, we do. $25 right here. All right, bank service fee. We don't have any interest earned. So again, what's happening here, right? Right here, we are booking a transaction, right? And we covered it previously, but again, let's make sure we understand the debits and credits. So one thing we know for sure, our bank account balance will be reduced by $25, right? Because it's a service charge. Bank account is an asset. It's reduced when it's credited. So here it is. This $25 right here is a credit to this account. What else is happening? Well, our expenses are going up, and expenses go up when debited. Here it is, right? And this is our expense account. So this amount right here, even though we're entering it once, it is both a debit and a credit, right? And it's a debit to account 61,600, and it's a credit to account 11,100. So here it is. Let's get with reconciliation. Alrighty, so here we are. We have some of our transactions that we see. We see the $25 charge right here. What else? Okay. We see the checks. We see the transfer payment. Again, let's make sure we can see our amounts right here. Okay, so here it is. And another check, right? And we still have a difference, right? Because again, there's a few things that we got to book, right? What do we have? Well, we have a drawer. We took some money out of the business for personal use, right? What else we have? We ordered some checks, and we have a fee for from the bank for processing credit card payments from our customers. So we got to book all those, and then we have some deposits that we got to book, right? So let's get on it. Okay, let's do bank deposits. So this one is going to our bank account. First one is, again, let's make sure we get the date correctly. All right. Okay, here we are. All right, and this is cash sales. All right. And we want to enter amount right here. Oh no, that's the first one is not the cash sales, right? That's our investment. All right, so remember we took some money out of our cash. So that's the one that we got to remember. That wasn't the sale first. So what was it? That was the cash that we held on hand. Remember, we took in advance and we were holding that cash, but now we're depositing it into the bank so that we can start operating our business, right? So here we are. Let's just do this so we can see it better. All right, so here it is. Again, what do we have? Well, we know one thing for sure, right? Our bank account is going up, and bank account is an asset. It goes up when it is debited. So here it is. What else is going on? Well, our cash holding, because we were holding that cash, and we're now depositing that cash into the bank account, so our cash on hand is reduced, and it's also an asset. An asset is reduced when credited. So we have two assets here, right? One is credited and it is reduced, and one is debited, right, and it is increased. And then there's $200 that we basically kept in the cash drawer so we can operate the business, because remember, we borrowed $2,500. So here it is, right? This deposit is good to go. Double check everything. Yes. So again, what's going on? This amount right here is a credit to account 10,100, right? And it is a debit to account 11,100 right here. Okay, so here you go. Let's go ahead and book it. All right. Again, see, the cool part about QuickBooks is that we can stay in the reconciliation while we're booking those additional entries. So that's definitely the cool feature that QuickBooks retained from their desktop, and they definitely, we do appreciate that they implemented it with the QuickBooks Online version. So again, let's just do this and book the rest of those deposits. Okay, next one is, all right, again, bank account, received from our customers. This one is sales. All right, and then description, that's now we have cash sales. So that's our first sales. All right, and then the amount is right here. So again, this one is good to go. Let's reflect it, the debits and credits. So what's going on here? We know for a fact our bank account will increase, right? So the balance will go up. So here it is. And our sales are going up too, right? And sales / revenue go up when credited, right? So this amount right here, right, it is a credit to this account, and this amount right here is a debit to this account, right? So here we are, good to go. Again, although we're entering it right here, we're not affecting it. That's why on the previous one I showed this amount. So technically this amount impacts them both, but if we entered multiple lines, it would be the sum of them that would show up here. So anyway, but the important part are the debits and credits, right? So here we are. Let's go ahead and save a new. And we're going to continue with booking our deposits. All right, so we have okay, so again, that's received from our customers. Again, this time it's sales. We're starting finally to sell. That's our credit card sales. All right. Okay, so here we are, right? Everything is good to go. Again, let's make sure we understand the debits and credits behind this transaction. Again, very simple part. What's going on? We know our bank account balance will increase. Bank account is an asset. Assets increase when they're debited. So what is the offsetting entry? Well, in this case, our sales, right? Because we got that money by selling food and drinks, and therefore our sales went up, our revenue went up, and sales and revenue, they go up when they're credited. So here it is. This amount right here, $4,068.75, right? It's a credit to account 41,100, and it's a debit, this amount right here, and it's the same because we only have one line, right? This amount right here is a debit to account 11,100, right? Because it's an asset, it's going up by this. And this is revenue sales, they go up by this amount, which is identical in this case. Anyway, let's move forward, saving new. All right, we have one more cash deposit. We know that's also sale, right? We only had one investment. After that, we started making money. All right, so here it is. All right. All right, this is cash. All right, cash sales. And again, I know you know by now, so follow along. You know what debited, what's being credited, right? You can just tell me, and and it's important to understand, right? Because again, practice is what makes it perfect. Okie doke. So here we are, right? This amount is a credit to this account, 41,100. And this amount, and incidentally, it's the same amount here, right? It's a debit to this account, right? This account is an asset, it goes up. This account is sales/revenue, it goes up as well as a result. Okie doke. Let's save a new. We're done with our deposits. Let's take a look. Voila, right? They're showing up. Yay. That's what we want. All right. Okay. So we still have a few more items, right? To get to that perfect zero. We need that zero. We need to get to that zero. Okay. So what do we have? Well, we have a draw, right? So there's multiple ways to book it, right? We can do a journal entry, right? We can do expense. So again, even though it's not an expense in this case. So let's go ahead and do a journal entry just to, again, remind ourselves how cool it is to have access to this wonderful feature, especially while we're reconciling, right? So that's the cool part. All right, member draw, it's equity. All right, so again, we know what's going on, right? It's going to be debited because equity is reduced when debited, and if we're taking money out of the business, right, we're reducing our equity. We also know that our bank account will be reduced, right, and it's reduced when credited, right, because it's an asset. So let's put draw. Okie doke. So here we are, right? Our debits and credits are depicted right here. That's the cool part about it. Okay, but let's again make sure that we understand the equity is reduced, right? And we'll see it at the end of the year, right? When we close out the member draw into the equity account. So that's why it's kind of counterintuitive, but trust me, because this is an equity account, it's reduced when it's debited. And then what else is going on? Well, bank account is an asset. And when we took the money out, the balance dropped a little bit, right? By $300. So here it is. It's reduced. And most importantly, at the end of the day, these are two in balance, right? So again, here we are. Let's go ahead and save a new. All right, what else we have? We have checks, orders, and merchant account fee. We might as well just book them here too, right? While we're in this wonderful feature, we can practice a little bit. Okay, so this is checks. All right, so again, let's do it the other way. What's going on here? Well, bank account will be reduced. Bank account is an asset. It has to be credited to be reduced. All right. All right, what else is going on? Well, we're going to have an expense. Let's see. That's going to be bank service charge, right? Because, checks are from the bank. So here it is. We have debits, we have credits. They equal out to each other. Let's make sure we capture it again. Okay, what's going on, right? Our bank account 11,100 will be reduced. It has to be credited to be reduced because it's an asset. What else is going on? Our expenses on bank service charges will go up, right? And here it is. Expenses are increased when debited. And again, the wonderful feature here, it's all right here, right? We see the debits and credits. Okie doke. All right, one more, right? Merchant account fee, got to book that one. So let's go ahead and again stay here just to solidify that QuickBooks Online has our almighty powerful helper, journal entry, right? And that's what helps us. So, all right, bank account again will be reduced, thus it has to be credited. And then merchant account fee expense will go up and it will be debited. So here we are. Again, let's make sure, let's do it the other way, just for kicks and giggles. Oops, what happened? Here it is. All right, so debits and credits. Oops, that's what happened. All right. Debits and credits equate to each other, right? Bank account is an asset. It is reduced, thus it has to be credited. So here it is. All right, I kind of switched them up to confuse you a little bit, but you can't be confused by now, right? You know your stuff. Anyway, and the expense account for merchant account fees, 61,500 goes up, and it has to be debited to go up. Here we are. Okay, save. Close out. Okay. Okay, so by now we booked everything. We should be able to get to our 0. Right. Okay, so here we are, our checks, our draw, and then our fee. And we're at 0. Yay! We finished reconciliation, right? So here we are, the magic 0 that we want, right? Everything looks fine, all right? Ending balance, yep, looks good. Everything looks good. Let's finish it. Again, see, the only thing here, QuickBooks Online doesn't prompt you to print the report. I suggest you do it, right? Because you will attach it to the statement and does indicate that the statement has been reconciled. Here it is. Right? We have it. Balance equals, all right. Our deposits, yep, looks good. And our charges look good, right? At this point, we would print it, attach it to the statement, and we're done. So again, the wonderful features of QuickBooks retained in QuickBooks Online that you can still make and post entries while you're reconciling. And that is just, again, one of those awesome things that QuickBooks allows you to do.